Hey everybody, this is Jim at SP500chart.com doing a little special video here since Apple has been in trouble lately as a stock, and I've kind of foresaw some of the trouble, though I have to tell you I never saw it getting over 700. There was reasons to believe that that Apple was in trouble about a year ago, and I did a video back in April of 2012. Again, missed the top there, but still picked up on some of the underlying weakness that has been exhibited. So before I get into the chart, I just want to remind you that SP500chart.com and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. So you might ask yourself, why is this guy doing this video? Well, I'm doing it because I have a service, and it is at sp500chart.com. Go check that out. That's this is a freebie, but I do a video similar to this after every day's close of the S&P 500. So just for what it's worth, you might not even believe in technical analysis, but I want to show you a couple things with the Apple chart. First thing is this is a logarithmic chart. What does that mean? Well, that means that every quarter of an inch that we move up on this chart, regardless of what the price level is, it represents the same amount of percent gain. So if we go from here, if I draw a line that's this high, if that represents a 120% gain in 1998, and I don't know that that's what it is, but I'm just guessing, then it would be a 120% gain in 2006. And it would be a 120% gain. I think I'm probably pretty darn close with that, by the way, just guessing. It would be a 120% gain in 2012. And the reason I use a logarithmic chart is because people tend to trade based upon percent loss or percent gain, not so much on, ooh, my stock went up $1. Okay? For example, if you had invested in Apple stock in 1995 and you had paid $11 a share for it, and it went down $5.51 today, you would be in a very different situation in 1995 than you are today, because you lost 1.28%, not 50%. So that's it. Apple had been, since the mid-90s, trading in a pattern that was constrained by two lines, one at the top, one at the bottom. Now, look, sure, there are not that very many touches on this, so I would not ascribe a lot of technical significance necessarily to these lines when you have touches that are 7 years apart. But it's surprising how often you still see this. But the point is this, is that as Apple climbed, it started trading in smaller and smaller increments. That's all this shows. And this line at the top did get taken out to the top side, and when that happened, I made the comment that this looks like this may be a blow-off top, because we're getting over a long-term resistance line. And that line, the top line, has its genesis in 1, 2, 3 different occasions. Now, let's leave this chart and let's go take a look at a 2-day chart. If we look at Apple on a 2-day chart, you will see that there was a channel that had developed for much of 2010 that lasted all the way through 2011, and that channel was defined by this line and this line. And when Apple blew up over the top of this line, back in early 2012. That's when I made my first video where I said, is Apple now in technical trouble? And I was later proved short term to be wrong, as it did come back and then pull back, make another rally for an all-time high around 700. But since then, Apple's given up 275 points. And there's been a development in the chart that I want to show you, and that's most easily seen on a daily chart. The development is this. Apple has formed a rather sloppy, but still, I believe, a legitimate head and shoulders top. And I'm not going to go into the theory on head and shoulders. If you want to, join my YouTube channel, Old School Chartist, and look for a video there on head and shoulders patterns. But anyway, basically, left shoulder, head, right shoulder, breakdown, little bit of a pullback, sort of to that neckline, didn't quite make it, and now more weakness. So, what do we look for going forward? Well, you measure the target from a head and shoulders top by measuring the height of the head from the neckline. This is the neckline. And from the spot that it broke down, you see where that lands. And that lands Apple's target. Well, I think I told somebody 360. I lied. It's more like 369, 370, something like that. So, you know, I would be careful with Apple. I would wait for that target to hit before I would get involved with it. It also looks like we're getting some short-term tops lining up as it's been working its way down. If you're a more patient person and you're just itching to buy some Apple stock, wait for this line to break, because obviously until that line breaks, Apple isn't going back up. So the target we have for a minimum downside target in Apple is 369. Call it 370. And when that target hits, if you're like I said, if you're the more patient type, wait for it to hit, then wait for a confirmation of a trend reversal by the breaking of this line right here. So there you go, guys. I just wanted to share this with you. You can see that the break of that blue line isn't that great, but this this target from the head and shoulders top, I would respect that. I would wait for that. So thanks for taking time out of your day. Oh, I'm going to show you one more thing on this chart. Somebody emailed me because back in last April, I was saying Apple might be a good buy if it comes down to about 420 or so. Well, at the time, what I was basing that on was something that this chart has now changed. And that is, I was thinking, since I was doing this chart up here, I was thinking that there was a chance for a swift sell-off that could bring Apple down to 420 within that summer. That didn't happen. So even though we're around 425 now, it means 425 in March of 2013 means something different than 425 in May of 2012. So ignore that. That was short-term news. So look at, and again, that was based upon a return to this trend line. And when it came to this trend line, when it did hit this trend line, it made a nice move, about a 14-15% gainer off that line. However, got to take everything in context. So that video made last April, that's old news. Forget about it. Look at it. It's still interesting. But that's not really as it's not relevant today because we're dealing with a different chart with a different pattern. So thanks for watching. Take care. Visit sp500chart.com For $19.95, you get daily S&P 500 videos. And go to my YouTube channel. Check some of those guys out too. Thanks.